All right, guys, welcome back here. I know some of you have already understood what exactly is liquidity, but you still have a question in your mind. And I know some of you are already asking, now that we know what liquidity is, then how can we identify liquidity? Where can we find liquidity on our chart? Very important question. So let me tell you this. There are locations you're going to definitely find liquidity, and I'm going to show you right here on my screen, and then we're going to go to the charts and have a look at where we can literally see liquidity. Liquidity is something that cannot be hidden. The moment you see it, you'll be able to identify it. So write this. The first thing to know is that liquidity can be found either above highs or below lows. Now, remember in the chapter where I taught you market structure, I have explained to you in detail that market has three major directions, either an uptrend or a downtrend, or market is moving sideways. But then there's also something you need to understand. Let's take an uptrend, for example, as a scenario. Now that we've said that liquidity can be found either above highs or lows, remember that we said this is a high, this is a high, this is a high, this is a high, right? And this is a low, this is a low, this is a low. So in an uptrend, you have higher highs, you have series of higher highs and higher lows being arranged in that sequence. So what I am saying is that in this movement, it is assumed that liquidity can be found here, can be found here, can be found here, and it can also be found here, it can be found here, it can be found here. So both up and down, we have liquidity. Reasons is that, let me tell you this. Remember we said that if you are taking a buy from here, your stop loss is going to be where? Below here. So your liquidity is here. So the same thing here. If you're taking a sell from this up, where is your stop loss going to be? Above here. So the seller is selling from here and the buyer is what? Buying from here. And the stop loss is, if this guy is having a stop loss here, that means it's a sell order. For a seller, your stop loss is a buy order. You're buying at a higher price. The same thing is the exact opposite. Maybe I didn't explain for the buyer or the seller initially, but then now you can see that if you are selling it from here, your stop loss here, you're simply saying that I am selling at what? $180 and my stop loss is $200. Who wouldn't want to sell it for you when you're willing to buy something that is supposed to be for 180 and you're willing to buy for 200? So price will come and sell it for you before it goes down to show you that they are after liquidity. All right. So price is always going to find the location. You see, liquidity is just like a magnet that attracts price. Just like a magnet, it attracts price close to it. So now for every high, we have a liquidity above it, because that is where your stop loss is. Your pending order, whether buy stops or sell stops, that's where they are. The same thing for a downtrend. Every time you see price moving downward, stop loss is here, stop loss is here, stop loss is here. And there is definitely people trying to buy at the bottom. So their stop loss is here, stop loss is here, stop loss. So for the sell scenario or the downtrend, we have lower highs and lower lows. And that is the same explanation. Then we have relative equal highs liquidity, which can be found mostly, those of you who traded rather support and resistance, probably when you started trading Forex, you will understand this properly, even though this is not what we're doing, but then you will know that the more the number of highs and lows, the higher the liquidity pool, right? The pool of liquidity. So we have relative equal lows. So in terms of density of liquidity, please mark this word. In times of density of liquidity, when we have more number of highs or lows, we have more stop losses, because a lot of people are buying at the bottom and selling at the top. So your stop loss is here, and your stop loss is here. If you are selling from here, your stop loss is here. If you're buying from here, your stop loss is here. So basically what you will see for this is that this is the location of liquidity for a ranging market or consolidation. I hope this is well understood. For a ranging market or a consolidation. So in this regard, you're going to see that people that are buying from the bottom, their stop loss is here. So this place is a pool of liquidity, pool of stop losses. Right here too is a pool of stop losses. Now, I'm going to take time to explain what inducement is for you. Inducement is a deceptive movement that you're going to literally see on your chart, and you need to know how to deal with it. So let me just go to the screen and show you how these things are. All right. So this is an uptrend, right? This is an uptrend. So if you're looking at this, what you should know is that above here is liquidity, above here is liquidity, above here is liquidity. Down here is liquidity, down here is liquidity, down here is liquidity, down here is liquidity, down here is liquidity. As you see these lows being formed, all of them you have people stop losses. But the question is, when do we now see price coming to target the liquidity? I hope you know that if price finishes an uptrend, it will start coming down to locate all the sell side liquidities. All right. So this is a sell side liquidity, well situated here. Sell side liquidity, well situated here. Sell side liquidity, sell side liquidity, sell side liquidity. Now, notice what happened. As price finishes with this area, when price was moving up, it was taking out all this liquidity. You see it? The stop losses, taking out all the stop losses, because definitely, whether you like it or not, somebody is selling from here. And where do you think his stop loss is? This place. Was he stopped out? Definitely. And somebody, maybe a breakout trader or somebody, is doing something there with a pending order. So this is where the stop losses for those who are selling are. See stop losses. Even here, somebody's stop loss is here. It was a hit. So the ones that are at the bottom, there's liquidity, for example, and this one, for example, and this one, for example, and this one, for example. All of them will now be taken out when price finally completely changes direction. Remember, in your market structure, we said that price can only change direction when we see a market structure shift visibly. And this was what happened. Market structure shift here, and price started going down. But while it was going down, it was taking out all the liquidity here. All the liquidity is being targeted. So it is important you know the location of liquidity so that you don't get stopped out by surprise. So those are the places where you see liquidity. Now there's something that ICT taught us, and that is about where you can start identifying liquidity. Let me quickly say that before I round up this module, or this particular video rather. So look at this. I hope you know that most people believe that this is where liquidity is resting. All right, below this low. But then this is what the concept of liquidity talks about. So the liquidity starts from where the bodies stopped. Can you see this body, where the bodies stopped, all the way to where we have the low? So this is it. Where the body started to where the low stopped, that's the lowest wick, can be considered as low density liquidity area in terms of the number of stop losses. Except for uninformed traders, this is where you see less people put stop losses here. So the lower you go in terms of this one, now we're dealing with the low, not the high. The lower you go, the higher the density of stop losses. All right, you see this area up to this area. So more liquidity is here, which is the stop loss, than here. So the liquidity starts from here and it increases as you go below the lowest area. So that is where you can find liquidity. I hope you've seen that. The same thing with this area. That is why sometimes you will see price not able to go above the high. Why? Because there is still liquidity within this body. It's just that it's low density. The density of the liquidity is not much, while above this guy we have higher liquidity. So don't be so carried away to forget about this area. So liquidity starts from where the bodies stop. That is why if you notice carefully, you're going to see most of the body, they are equal when it comes to closing. You're going to see them close at an exact location. All right, so that is where to see liquidity. The same thing here. I hope you've seen it. I hope you've seen it. So we're going to talk about buy side and sell side liquidity eventually. And then you're going to see how liquidity is being carried out. And we're going to talk about inducement so that you will see the importance of this. And that is going to help you to stop taking trade and get stopped out. Remember, I said that we're going to do something that will help us not to take bad trades. All right. So all the liquidity, the same thing for a range. I have not shown you the one for a range. That is to have price going up and down. Let me see if I can have one quickly. All right. So this is a range, and I want to show you that we have relative equal highs here and relative equal lows. So all the lows here is where we have pool of liquidity. Remember, I said the higher the number of lows, the higher the liquidity density. All right. The same thing here. You see all of them. So when you see price pushes either below or above, is an attempt to target those liquidity, because everybody buying or selling in this kind of price action, if you are selling from here, your stop loss is going to be here, right? If you're buying from here, your stop loss is going to be somewhere here. So that is why we see price will now come and grab this or grab from here and turn back and move in a different direction. So when you see this kind of scenario, you know that this is a liquidity area. I don't want to complicate so many things, and I don't want to make this video so lengthy, but then that is the concept of liquidity and where you can find liquidity. So in the next video, I'm going to quickly explain to you the types of liquidity and how you can identify them on your chart.